Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates. If you missed the developments in the market last week, quick summary for you. Fed gave markets an early Christmas last week by putting out a dovish commentary compared to other central banks like the ECB and BOE. Markets have started pricing a rate cut starting from March. Equities have rallied, yields have fallen. Now that we are slowly entering a shutdown phase for the Western markets, volumes will be thinner. Amidst all of this, rupee volatility picked up as on Friday we even broke the rupee 83 barrier intraday and just barely closed above rupees 83. Good morning, JK. I'm sure our listeners are very keen to know the next path for the rupee. Is it a buy on dip market? What do you think?
Good morning, Swaraj. Yes, I think we have a day when we can speak a bit more on the rupee than we are usually doing. Yeah, it was a big move considering how we have been, held in a very tight leash for several weeks, in a 2 paisa, 3 paisa range, and almost 40 paisa move, down move for the dollar on that day, on Friday rather, 83.35 to 82.95, just managing to close above 83. The trigger really came from, I think, initial trigger from a large flow, and data indicates that there was an FII inflow of more than 9,000 crores on Friday. And important thing was that while central bank was buying, they kept lowering their buying rates, unlike in the past, and that's the reason why market got bolder to sell. And in between, we also had a trade number. Trade deficit for the month of November came at 20 odd billion, just 20 billion and above, and that was almost more than 10 billion lower than what we saw in October. And it confirmed the fact that the higher number in October at 31 billion was the result of 95% increase in gold imports, and record import in silver, as well as higher crude prices, which came about after the Middle East conflict. So this added to the momentum, and I think 83.10 break brought in some stop losses, touching 82.95. We did have some, importers jumping into latch on to 83 levels and bought, and but really did not close much higher than what we saw. So it really gives us a feeling that perhaps the central bank is okay with some strength if it is backed by flows, strong flows. And technically, it does look like we can see up to 80 to 70 if the central bank keeps a very light intervention, and not as they were doing earlier. Rupee has had a lot of factors going in its favor, but has not really moved, starting with the macro data of GDP and then the election results, as well as the big flows, of course, have been, the factor which we cannot ignore. Total flow for the year now stands at 24.5 billion, more than offsetting the combined outflow of 22 billion in 2021 and 2022. And that's very significant. And these flows have actually made up for the fall in FDI flows for the year, which is, just 4.5 billion net for April to September period, compared to 19.6 billion in the same period of FY23. Going forward, spurred by expectation of another stable government returning to power in general election, I expect FDIs also to take a good leap. Now, on the global markets have been catching their breath really, because one after another they had good news, inflation, and then the Fed pivot. I somehow see a lot of exuberance in the yields, which have dropped below 4% for the 10-year, and even the 2-year is below 4.5%. And market is assuming a lot. While what Fed has done is not too different from what they were saying earlier, in the sense that yes, sorry. Powell did say that we have seen peak in rates, but that is not something that market was new to. Market had already been discounting the fact that rates had been seen at peak, and markets were discounting 1% rate cut already, and for what Fed indicated was 0.75 rate cut for next year. Again, there was no commitment as to when the rate cuts will happen from, but market is exuberant and thinking that it will happen from March. So I think markets are fully priced in for whatever the Fed said and whatever we can logically expect to happen. But that's the way market always overdoes things, and that I think yields are due for a bounce, particularly considering the fact that we still have a lot of supplies of paper to come from the government side, their fiscal deficit being higher. We all know about it. And year-end dollar demand, all these things can see correction in the yield as well as in the dollar. Dollar has had a 5% down move from late October, and that can correct back a bit. And euro can see up to 1.08, GBP can see up to 1.25 levels. These are very normal moves, but of course we do maintain a structural view of bearish dollar, but that needs to be having a healthy corrections in between, which is also happening in gold. So I think we are in for some consolidation period in the rest of the 15 days. We also know that the stock markets have been going one way, particularly in India and in Europe also, European stock markets also. So all these exuberant moves can have some corrections in the coming days. Only thought I am having as I finish today's update is that Powell's dovish pivot, which was a big surprise. Maybe there was something more to what we are seeing. Can be some some other thing which is not apparent. Some risks that are emerging. One evidence that we are seeing is increased usage of the liquidity facility that the Fed has afforded to the smaller regional banks, which is massively increasing. And that can be one reason of some risk aversion on the anvil. So that is something that we will see. Otherwise, we feel that the markets are not going to do too much between now and December. And maybe for a change, we may have more volatility in the rupee than other currencies. It's more of a hope right now. Thank you.
Thank you, JK. And just quickly summarizing for rupee, we had a big move on Friday. Big move in the sense considering we have been trading in very narrow ranges earlier. This has been largely attributed to the large FII inflows of approximately more than 9,000 crores on Friday, and also accompanied by the Indian trade deficit data for November, which came at $20 billion, more than $10 billion lower compared to the October number. Now, the October number had risen primarily because of the rise in gold and silver imports, and because of all the festive seasons that were there at that time. So a test of 8270 is possible if central bank activity is not very strong. For the global markets, we have been seeing a lot of exuberance with fall in 10-year US yields below 4%, big rally in equities, and pricing of US rate cuts from March 24. As JK mentioned, some correction in all these asset classes are possible. Now, one interesting thing to note, which JK mentioned, is there may be something more to Powell's dovish pivot, because central banks have more access to data than all the markets do. And one interesting point which he mentioned was, of course, the use of BNFP liquidity facility that has been increasing. So maybe something is brewing which markets are not yet paying heed to. We'll keep following this story. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.